Hello and welcome to another update video about Quant QNT. Continues to be following this yellow trend line there to the downside. That's the one, I think we looked at it in the last video. If not, it was one of the signals that I posted on the Telegram channel and on Discord. Because what I did highlight last time was that as long as we're following that descending trend line here in yellow, which actually forms a little bit of a descending wedge here together with that channel trend line. Yeah, we've got that white channel and we've got that yellow trend line, which is a little bit steeper and forms this kind of descending wedge here together with a white support line, the lower boundary line of the channel. So as long as we're following below that, the short-term trend is down, but I would be watching for a reversal in the yellow support area. Someone asked me earlier on Telegram, isn't it unusual that we saw that strong bounce there? I'm not sure if it was that unusual. I mean, we are in the support area. You have to expect or at least be prepared for a bounce from here, either way to the upside, yeah? Doesn't mean it will happen. My view is that below the 78.6 retracement, this 1-2 setup that we have on the radar isn't going to work out. We will then have a good chance to drop down much lower. Maybe first to $100 and then between 94 and 61 if the $100 level fails as well. The thing is that, let's say out of 100 1-2 setups, yeah, and if the price breaks below the 78.6 retracement on a time frame like this, maybe only a handful will work out in the end as intended. That's why this is such an important level. I'm not talking about a wick below it, but I'm talking about a sustained break. Okay, sustained break. Now, we still are getting some opportunities here in front of us. QNT is one here. We're just in this opportunity area, in this support area for a possible trade in a third wave to the upside into the $200 region. Based on the count that we had here, a 1-2 setup and another 1-2 setup. Reward to risk is absolutely amazing here. I mean, if we talk about if it drops below $114, then we have a more significant drop to $100. Yeah, so basically below 114 would be near invalidation or would make this setup, let's call it invalid or unlikely. But if the target takes us to around about $200, I mean, it's a third wave trade that would be, yeah. And there's some opportunity to make money, which doesn't mean you will make money if you trade this because there's no certainty, but it's all probabilities. And from the current low here to the 1.618 extension, it takes it to $220. I mean, who wants to argue with that reward to risk ratio? Right? I mean, it is what it is. If it's going to work out in the end, the market is going to decide that, but it's all probabilistic. And where's this gray tool? One sec, I just chose the wrong here. You know, if you let's just assume you entered here, target would be, even if target is only 200 and the stop would be 100 and whatever, 13, somewhere there. Now we talk about a reward to risk of 16. That's decent, yeah. Of course it can fail. If it fails, you know, we've got the next opportunity possibly at $100, and if that fails as well, then down here. So there's a decision everybody needs to make for themselves. Do I trade this short term? Do I, add something to my hodl portfolio, or do I just take the larger swing? I mean, if you have a range, we have a range here that goes down to $61. Below 61, I seriously think we are going to continue here with a bear market. But there's a case to be made, and that's currently the case on several of these coins, yeah? Don't try to be too precise with your particular entry points and exits. I mean, there's a case to be made to scale in like that. Yeah, why not add a little bit here, more here, more here, more here, more here, and get out below 60. Yeah, that sounds like a lot, but you need to manage your position size. Do the maths. Don't risk more than 1 to 3% in every single trade of your portfolio. And you could even, I would even count this as one trade, even if I have several spot positions, split here. But out of the whole of that triangle, which I would consider one trade, just with different entries, you don't want to risk more than 1 to 3% of your portfolio, right? And you could follow that for various coins. That's sort of my way of doing things. I might start to scale into this, but then again, my point is don't try to be overly precise on your entries, yeah, because there are several possibilities here. Everybody's looking for the one answer, but there are a couple of scenarios here at least, right? So we've got this 1-2 setup, or we've got the scenario where we're actually coming down in the C wave, yeah. A, B, C, where we could head into this support area, but we are basically already in support, and as long as you can take a bit of heat which means, you need to be able to cope with it if prices come down to 70, yeah, and you bought up here. But then that's where your position sizing comes into play. Because let's face it, if you start to trade from here, where we are, and you go, let's say, well, what was target, 210 or something, yeah? That's even, okay, you've got a reward to, let me just adjust that. Okay, that's questionable maybe, 1.5 as a reward to risk ratio. It's not great, but in my opinion, there's a good chance for it to turn around before it drops below 61. Now, if it doesn't, again, there's no guarantee of winning these markets, but my view would be that we probably don't come down to 61. Never say never, yeah, but there should be a bounce before that, and that would be a possibility to start to scale out again. But I think we've got some good opportunities here in front of us. And by the way, don't get me wrong, even if we say scaling in here, and yeah, okay, reward to risk based on this might not be... Hold on, why does it show... Maybe did I mess it up just now? Because it shows... Oh yeah, okay, 1.4. Yeah, okay. But this would only be the third wave, right? And there should be a fourth and a fifth afterwards. So you could make the case and say, all right, but this actually eventually should go much higher. Yeah, because if this is a 1-2-1-2 setup, yeah, and even if we come down lower into this region, afterwards, the third wave should take us to around about $400. So you're talking about, yeah, still decent reward to risk ratios actually, eventually, yeah. Maybe not in the third wave then only, but eventually. So yeah, I think, we've got some opportunities here in front of us, and maybe it will come down a bit lower. That's why I would pay attention to that trend line here. Just understand that below $61, I think we are going to continue with a bear market, yeah, and have a risk of dropping even below that June low below $40. But so far, it's all going according to plan, looking good. Yeah, we see a bit of a retracement. A lot of people waited for cheaper prices here. And next support would be at 114.60. And if you see it break out of the yellow trend line, might be a first confirmation we're heading to the upside, and the break of the descending channel would be even more suitable, yeah, for confirmation. And then we've got resistances at 147.85 and 163.50. Okay, that's my update about Quant. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.